In the last show, I'll read it. You said a number of banks that are banking in crypto is over 100 right now, according to Caitlin Long. I don't know who those are, but scrappy players are going to come in and pick up these pieces that want the business. Someone will be willing to do it because there will be money to be made. Did you ever think it was going to be BlackRock, though?
I was not predicting that BlackRock would surface. What's interesting, and I think this is why there's such a divergence of opinion, let's say between, there's one camp which is, oh, this is the 35th application or whatever that's been rejected, some big number. And then there's the other camp that says, wait, look at the facts and circumstances. And I'm in that other camp. And the reason I'm in that other camp, part of it is the political dynamic that Gary Gensler may have overstepped his bounds and is perhaps a little outside the lines of his administration and his party's goals. But the other thing too is the timing with the lawsuit. The Coinbase lawsuit is just too perfect. Mm-hmm. I think the first level analysis says, oh my God, the SEC is suing Coinbase. How could they possibly approve a product, that involves Coinbase, which would be, custodian and feeding market data, right, to this surveillance arrangement, which has been one of the SEC's major blockers to an ETF so far. I see it differently. I see it as the carrot plus the stick, right? Yes. The SEC is holding this big stick over Coinbase's head in the form of this lawsuit, but number one, they might not win. In fact, there's a good chance that they won't. And number two, it'll take years to play out anyway. And number three, almost every case that the SEC has brought in the crypto industry broadly, including Bitcoin, has been settled. In fact, I almost want to say it's been every case, but that'd be a good question for the lawyers. So they've got this stick, they got the cannon pointed at Coinbase, but they also can offer at this olive branch of this custodian and monitoring business for the ETF. And it's just too elegant of a situation. It's too elegant of a solution for it to be coincidental in my mind.
Totally. I mean, it was that news broke 3 days after Binance was sued. It was within a week. It was within a week, whatever it was. And if I'm a big Wall Street firm and I want to play in this space, like, you got to look at how much business they're offloading on the custody side to Coinbase through this action, right? So if I'm Wall Street and I want to put out this product, because I mean, they're just going to make gobs of fees on this thing, even at a low rate, which I think it's going to come in at a very reasonable rate. It's not going to be the Barry Silbert 2% or whatever GBTC is. It's going to be significantly lower than that. And when it does come into the market, they have to outsource all that custodial work. So, I mean, what better situation for Coinbase to get slapped with this giant lawsuit? The price is going to take a hit on Coinbase. They can then swoop in and start buying the equity of Coinbase if they actually see it as like a long-term technical, like from the IP standpoint, the asset of Coinbase is really just kind of like all that technical setup that they've been doing for the last, what are we, almost at a decade for Coinbase? Like, that's not something that they can start up and put in place in, a couple weeks. Like, that's a major thing that they have established over the past decade. So, like, hey, let's slap them with this lawsuit. Let's go buy up some of the equity. I would love to see who the shareholders are after the close, after this next quarterly closeout, to see how much change in share ownership has happened. I bet you Wall Street's buying the hell out of it. And so it's like this double whammy, and it's like all fitting together for them. But yeah, no, it's pretty fascinating. It's very big news. It's a very big deal.
I agree completely with you, Preston. And let me take it a step further in terms of the strategic view of BlackRock. So BlackRock, despite their success becoming by far the world's largest asset manager, what was the biggest mistake BlackRock made in their history? They let go of Blackstone. There's a reason that BlackRock and Blackstone, by the way, the latter being the world's largest private equity firm, hugely profitable business, right? Total behemoth. There's a reason they have practically the same name. They were actually the same company. And they split. The management team split and the businesses split. And that was a huge strategic mistake for BlackRock. Since then, they have gone in the direction of offering literally every product under the sun, right? They have active managed funds. They got big into the passive funds, the ETF business, because they knew they wanted to own that vertical. Okay, my former firm, the hedge fund I worked at for 6 years back in the day, was subsequently acquired by BlackRock. And they paid, let's just say, a very generous price for the equity of Tenenbaum Capital, the firm I used to work at, which is undisclosed, by the way, so don't quote me on it. And of course, I have no inside information. So it was an eye-opener for me because it was not core to their business at all at the time they made the acquisition, but it was another data point in the history of the firm, of BlackRock, in their quest to offer essentially every investment product under the sun. They've just continued to diversify and accumulate and acquire. And what's the one asset class, quote unquote, where they have had no exposure up until now? It's Bitcoin. And it was sort of inevitable, I think, that it was going to happen. There's no way we could have known when, but it's just part of their long-term strategy of being the supermarket, that offers every financial product, every investment product to the market.
Yeah, I've been surprised. It's hard to tell with BlackRock and these other institutions that seem to be shifting their sentiment towards Bitcoin. How much of it is they actually believe in the future of Bitcoin and the potential here for this new monetary technology? And then how much of they just responding to customer demand that they want these things? And I think, Preston, you make a good point. These big, large legacy institutions, these dinosaurs, they don't have the technology in place. I mean, this is why Morgan Stanley acquired E-Trade. This is why Charles Schwab acquired TD Ameritrade. It was really a technology play because they didn't have the resources or the time to build that stuff out internally. And perhaps this is just a play to give Coinbase that carrot, so to speak. And if they will acquire a lot of the equity of Coinbase, just try to get some good price action to buy that cheap. I think that's a really sound point. It's really interesting. But how much do you guys think that this really is like Larry Fink going on TV saying that Bitcoin is this international asset now? Or are they just responding to customer demand that say, hey, we want this thing, and they're just going to build it now? Like, what do you guys think about that?
I don't know. What do you think, Andy?
Yeah, I do think it's customer demand driven plus some forethought. So if you get back to my framework I just laid out about they want to be the financial supermarket, and they want to, if there's demand for a product, they're going to sell it, right? And they are somewhat forward looking. They were somewhat forward looking with their ETF business. There was a time, I don't remember when that deal got done. I think it's probably 10 or 15 years ago now, when the ETF market was showing traction and showing scale, but perhaps it wasn't as obvious that ETFs were going to take over the world. Some people figured it out. Probably Preston did. But I hadn't figured it out quite by then. And so I think, Fink's no dummy, and his board are smart. And so I'm sure that, I'm guessing that the math and the strategic calculation they're doing with any new business or any new segment that they enter is, how much traction is there, plus how much growth potential do we think there is, plus how long is it going to take to play out, sort of those three factors. And if the scores line up favorably, my guess is they entered the business. I mean, I don't have any insight into, I haven't read the board's meeting notes, but if I had to guess, I'm guessing they saw a business just like you laid it out. They figured either there's customer demand now or there will be, so we should be in it.